station of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the July 22nd, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a magnificent Monday. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And welcome to all our new listeners and viewers here at TFNN. Welcome to the Hotel California, because once you check in, you'll never check out. Now, check-in time, it's been changed. Check-in time here at TFNN, it's 8 o'clock each morning as our man John Logan kicks off this TFNN trading day with a great show called Global Market Pulse. And John focuses primarily on his market profiles. I show those market profiles on my system as well. What a great show that John had this morning. Folks, you know, TFNN provides 10 hours of live technical analysis each and every trading session out here. Group of highly skilled technicians. Because the shows are live, because the market is open, you know, we'll change our views and our opinions based on what each stock chart is doing. Of course, this is a call-in talk show. That means you can give us a call. We're happy to field your question, take a look at your specific stock or commodity or currency, whatever it is that you're trading, and give you the best advice that we can. Our call number is 877-927-6648. We'd love to hear from you. And for the next couple hours, I'll do all that I can do to teach you some of the tools that I utilize for trading these markets. That means we'll take a look at the A to B equals CD patterns. We'll take a look at Fibonacci expansions and retracements. Those, of course, the combination make up your Gartley and butterfly patterns. We'll take a look at candlestick signals. Those are the signs that the bulls and the bears make for you and I each and every trading session. Now, here's the thing. In order to really master these markets, that means you and I really need to think like a strategist, which means we don't just focus on tactics alone. Because to get our money to work harder for us than we do for it, it means that what we've got to do is we've got to think like a strategist, what I call Mastering Probability, which is also the name of my daily newsletter service, which you can access by going to the homepage of TFNN.com. Upper right-hand side, you'll see in the middle there, you'll see a list of the contributors. You'll see my name. Click on that. Then click on Mastering Probability. You can test drive the newsletter service for the next 30 days. It comes with an unconditional money-back guarantee. That means there is no risk for you. Well, folks, it is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up 55 points. They're trading out at 17,038. The S&P futures up 8.25 points, trade at 19,7450, right into a resistance level. NASDAQ futures up 19 points, up 0.5%, trade out at 39.45. Russell 2000 up 6 points, up 0.6% this morning, trading out about the 11.49 level. King dollar up 143 ticks, up 14 pennies. That's up at $80.77. We've got some movement in the markets here. Is this going to be a pop and a drop? Well, I'll tell you what, if the euro-yen has anything to do with it, we'll take a look at that stock chart here momentarily. The answer to that question is yes. Goldilocks back $1.60 right now, trading out at $13.12. Silver off a penny, so no big deal out there. It's trading at $21. Even Steven. Light sweet crude down 11 pennies, trading out at $104.48. A quick peek across the globes out here. We'll see that the DAX over in Germany, a small little party out here, up 1%, up 93 points. The FTSE up $56. That's up 0.8%. It was a party in Asia last night. We take a look at our three primary indices that we follow. The Nikkei up 127 points. The Hang Seng up 394 points, 400 points, up about that 1.7% out there. And up 1% last night was the Shanghai. It closed out at 2173 out there. Okay, so where do we begin our day out here? We got to begin our day with my favorite currency pair and yours. If there's anything that's going to upset the party out here, it will likely be the Euro-Japanese yen. Now, this is a 30-minute chart that we're looking at, and the 30-minute chart is in the oversold territory if we take a look at that relative weakness indicator out here. Nonetheless, you can see it broke hard. It started breaking hard here at about 2:30 in the morning. A little bit of a bounce here from forth as it got to that oversold condition, but we can see all that it really did here. That's a green little bar bars on my screen out here. All it really did was move sideways in order to be able to work off that condition. If there's a little A to B equals CD down pattern that it has formed out here, that says that the euro Japanese yen would make its way down to about the, let's see here. Right now it's trading at 137.71. I'd have to say 136.45, 136.31. But what does all that mean out there? Well, if we go switch over and take a look at our daily charts, this has got to make us say, something to think about. Now, we pay attention to this currency pair because typically it correlates to the directional movement inside our marketplace. It's gotten a little off kilter here as of late. That off kilter is not anything that's good for the markets because the correlation between this currency pair and the markets, when the divergence occurs, it resolves itself in the direction of this currency pair. Right now, if we pull this chart back here, you'll see big, huge rising price channel, and price has now moved all the way back down to the bottom of it. So we'll see if it can hold these lows. Say in the daily chart, it also is in the sold level out here. But, if it breaks this swing point, shoot, what does that say? If we take a look, well, I know what it says. What it really says is, and we could probably come up with this in a couple different ways here. First, you take a look at the 1.272 expansion of this little failed Gartley buy pattern that came in here on the trading session right around the June 13th, actually also formed out here on May 29th. The 1.272 expansion is 134.16. That's quite a ways down from where we're at right now, 136.70. And the thing here to be paying attention to, where our back is up against the wall. So we go over and we take a look at our actual weekly currency pairs out here. It's a Great British Pound. We can come back to that in a moment. But let's go take a look at the euro Japanese yen on a weekly basis. This is interesting because I didn't look at this chart here over the weekend. This is a weekly chart. Now, the weekly chart shows that price had broken above a resistance line. That's a resistance line, folks, that takes you back into the time frame of June of 2009, into August of 2009, into October of 2009. That is a red line that was resistance. Well, price finally broke above that. It took until November of 2013, but price finally broke above that area. Breaking above that was bullish. It was truly showing a significant change in trend. Again, it's a weekly chart that we are looking at. Price came back and tested it, as you do when you break out of any type of trading range or resistance area. You like to see price come back and test that. That's what it did here back during the week of January 31st, February 7th out here. It tested that area, rejected it. And now what it's doing right now, last week it actually closed back inside the lower part of the range out here. So that is, it's not necessarily good news from a bullish standpoint, as long as this correlation is still out there. And I don't have any reason at this stage to believe that it's not out there. From a bullish standpoint, you need to see it get back above that red line out there. If not, here's the weekly here's the weekly rising price channel. And it looks like that is where price would move. Let's take a look at the weekly A to B equals CD down pattern out here. The A point is going to be the high from the weekend of December 27, 2013. The low is going to be the weekend in February the 7th. See how these swings are kind of tying into our markets when they make highs and when they make lows out here? Well, the C retracement level, how about that? How about that for an A to B equals CD down? That's the high on March the 7th. Takes you really right down to, you'll see a little bit darker horizontal line going across my screen. These are primary trading range boundary lines, by the way, that you're looking at. The real thick, dark one happens to be the price at which the euro Japanese yen is most comfortable with, and that happens to be right around the 134, looks like 134.32 level, which will also take it right into the bottom of its rising price channel out there. So maybe that is, in fact, where the euro Japanese yen wants to head before it decides to try to make a beeline north out there. Let's go take a look at what else. Let's go take a look at, let me see what's going on currency-wise. What is it that's driving, what is it that's really, it's just the euro. So if we take a look at the euro, well, let's put this chart back up on the screen then. If we go take a look at the euro, try to find out what's putting the strength inside of the U.S. dollar index out here. So let me go back to our currencies. Where'd that tab go? Here we go. Let's take a look at the euro-U.S. dollar, see what it is doing. Euro-U.S. dollar now breaking out of a little consolidation box that it was in, breaking below a B point. That B point is the June 6th low. That's 136.19. That says you break below this, the euro could eat. Now, it's testing it today. So today, Yeah, it's a daily chart we're looking at. Today is really just a test, but it's flirting with the bottom of that consolidation level. If it can hold the lows out here, which would be 134.76, if it can't bust them down, well, it'll go try to bust it up. Of course, busting it up in this case here runs into that trend line and channel line resistance that takes us back into the 2008 time frame out here. If it does close below, let's say today the low out here is 134.76. If it closes below that, it's curtains for the euro, although on the daily chart it is down towards its oversold condition out here, but no reason that it couldn't move down to about the 132.07 level. We'll see if it can hold these levels. That is what's going on with the Queen. Right now we've got the Dow futures up 58, S&P futures, they're up 9 points, trade at 1975 out here. We get back from this breakout here. We'll go check out what all this means. We'll take a look at, are the futures getting ready to bust out, even though the euro Japanese yen is trying to bust it to the downside? We'll go find out. We'll be right back, folks.
Together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Let's see out here in the pre-markets this morning. We've got to the upside. You've got ARM Holdings. ARMH is the ticker symbol. Closed out at 42.57. Right now, trading out at 44.18 out here. We'll see. Let me take a look, see what this is trading into. So ARM Holdings has been in a decidedly downtrend out here. Well, it most certainly has. It has most recently been traveling back into this high volume low. So it's inside that area right now. The top of that high volume low is 44.03. The bottom of which is a price point of $40.90. It has not been tested here. It happens to coincide, as we can see, with a little breakout area that took place back in September 10th, 2013. So we'll see if it. So it's trading on the high is that is 44.03. Let me come back here. Where's it trading? 44.18 right now. So it's going to try to trade out of that swing point here this morning. GoPro, GPRO is a ticker symbol, closed at 41.58, trading out at 42.87. Still hasn't made it back to its highs of 49.90 from July 1st. Crocs, haven't seen this equity in quite some time. Closed at 14.84, trading up a couple of bucks right now. Let me see here. I don't show their numbers. Well, they did revenues of $376 million versus $363. Again, trading out at 16.04. Let me see, where's 16.04 going to take us? 16.04 takes you above its unfair high. That means above the resistance level, which is 15.42. 16.04 is going to take you right into the swing point from January 2nd out there. So that's interesting. So Crocs, let me pull this back a little bit further because this did have a nice gap up, nice wide price spread and accelerated volume. Don't know what was behind that move on December 30th, but it was a one heck of a wide-ranging bar with accelerated volume, 16 million shares out there. Now, the resistance area, let me just clean the chart up a bit here. We'll take a look at Crocs. Let's turn off a couple of different tools out here. Let's turn off the boxes. And I think that's all we really, let's turn off the moving averages too. Let's do that. We'll go ahead and clean this stock chart up. This way you can really see where the resistance level is in Crocs. It's right down here where it really broke down, and that's on the trade. Whoops. Let me do that again out here. I believe it was 16.95 is the number. Whoops. Jeez Louise, Steve-O. Get your act together out here, huh? Let me get rid of that right there. There we go. So there's your 16.95. We can see that's a gap down with some pretty big volume. So you can see really the consolidation pattern, in essence, that Crocs is in. This thing had a nice big downdraft July 25th. Volume-wise, the downside was 14 million shares. So 16.95 is going to be a key resistance level. It made it up towards that area. That's the January 2nd high. Got up to 16.88. So in essence, that is your resistance. You can get above that 16.95, then it changes its polarity, and old resistance 16.95 ought to become new support. That is on Crocs. CROX is the ticker symbol. Netflix out with numbers as well after the bell last night. And they closed at 451. It's trading down at 443 right now. Let's go see what 443 has in mind here. Let's go ahead. We'll put a couple of tools back up on the screen out here. We'll take a look at that nice low that it was making. It was making a low back here April 28th, doing it with a lot less relative weakness out there. Nice little bullish engulfing candle on April 29th. Little move higher on April 30th. That set up the bottom I did say it's trading right now in the pre-market at 442. 442 is going to take us, no big deal. It's point of control, the area where price is most comfortable with. In order to change its trend to the upside, what you're going to see Netflix need to do is close below 437.73 out there. That's its unfair low. It has not done that, by the way, since it came off of the bottom out here back in the end of April time frame. And that is on Netflix. NFLX is the ticker symbol. Right now we've got the ES Mini. She's trading out at, let me do this here. She's trading out at 1975 and a quarter. What's the ES Mini trying to do? As it has for quite some time here, it's trying to break above a market profile high. What the ES Mini really needs to do in order to break out today is what? That's right. It needs to get above the July 3rd high out there. That's its swing point. If it does that, it sets up an A to B equals C to the upside. The small one out here, that A to B equals CD pattern, it would look like this. I would come down to the swing point on June the 12th. I'd use that as my A point, my B point July 3rd. My C point out here was the little retracement on the last Thursday. That was the low, which was 1942.50. If, in fact, the ES Mini closes above not its market profile high of 1974, that's not such a big deal. The big deal would be the swing point of 1978.25. If it does that, that offers a price projection, I'd have to say, of 2020. That's right. The 1-to-1 A to B equals CD is 2003, but I think it's more like 2020 vision is what would take place inside of the S&P futures. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 36 points, straight out at 17,087. S&P up 8 at 1981. NASDAQ Composite up 24 points, straight out at 44.49. Russell up 6, straight at 11.53. NDX 100 up 20 points. New York Stock Exchange up 50. Habanero peppers. Did I say habanero? That's Chipotle Mexican Grill. CMG is a ticker symbol. Up 11% this morning. Up trading out at $655.96. Boy, you talk about being off to the races. This one is one to be watching because we're now at all-time highs out here inside of Chipotle. Any false step out here in the marketplace, and this thing creates a would create a huge island reversal. Otherwise, whoops, what did I do there? Let me come back here. There we go. So it's up at 658. It's taking out a swing point. This thing is swing point high out here. No real volume to worry about. That's the swing point from March 21st. Only 778,000 shares. It's done 288,000 shares in just the first 4 minutes of trading as we speak right now. So this thing is absolutely on fire. Let's put this on a weekly time frame out here. Let's go see if there's any weekly patterns that it's trying to complete out here. How about that? The weekly pattern, it would be, you talk about A to B equals CD patterns. Yikes. Holy Nikes. I think that's what he said in that movie out there. We're talking about the swing point for March 17. Only 2.8 million shares out there. You've done 1.3 million shares, and it's going to be able to blow that away, I would think, volume-wise. You want to know what the A to B equals CD pattern is on Chipotle? If it clears the high out here for the weekly basis, that high being that 622.90 level, if it can confirm that with price, your 8-point out here is the low back on October 22nd, 2012. Whoops, I grabbed the wrong area. Let me see if I can delete this real quickly. There we go. Let me start that again. The low, let me see if I can grab that swing point. There we go. Let's send the high. The swing point is going to be that March 17th level, and the retracement was down into April 28th. 1-to-1 A to B equals CD. Yeah, it's a doozy. It wants to join. Well, it doesn't get up to the 1,000-point club out there, but it would at least suggest 861 and 967. That's what the message behind Chipotle is on its weekly chart. But we're not done with the week out here, so we'll just take things one day at a time. Let's see what else do we have moving in the markets here this morning. Let's take a look at a couple things to the downside. Now, after the market closes today, we've got Microsoft and then Apple. Apple usually reports right at about 4:30, so we ought to be able to expect a little bit in the way of fireworks out here. Silicom Limited, SILC, is the ticker symbol. They reported revenues of $17.9 million versus $15.7. So they beat the top line out here. Net income of $3.3 versus $3.3 from the prior year. Looks like everything was in line, but if we take a look at it, it's out of line this morning. Moving to the downside out here, looks like just a second gap to the downside. Let me see where this thing is trading into. Not a lot of people happy to own this equity because it's almost, it's not at its, it goes back a little bit further. But right now it's trading into a swing point level back in August of 2013. That low is $29.85. It's trading at $30 right now. This does not look good. Let's put this on a weekly chart, see if we can see any kind of volume out here on the weekly basis. Oh, man, this does not look good at all. If it breaks through the level here on the weekly chart, 31.45, you're at 30.52. Let me make sure that's the right number. No, 29.85. So you're 30.52. You break below that, it offers a promise of 25.90. And I'd say there's a base right around that level, right in the 21.86 area. And that is on SILC, that is Silicom Limited out here. Let's take a look at, you got Harley-Davidson, the hog out here, trading on 5% this morning, down $3.50. Let's go see what is behind its move out here. Let's go change this. Let me change this to a daily. Well, you can see on the weekly chart. We'll keep it up on the weekly here for the moment. It's trading into a market profile low. Should be support right around the 63.54 level where it's trading. But let's go see what it's really done here today. Is it gap down? Yeah, it has gapped down. It's not a good scene when we take a look at the hog. It's got some pretty decent volume also behind the move. So far, 950,000 shares have traded hands. The swing point that it's trading into only has 1.9 million shares, so that's not a good scene. Ought to be able to bust through that swing point. Then it ought to head down to the next swing point out here. And that swing point, that's got... No, it didn't have volume. Really, 1.9 million shares. So Harley looks like it is at least headed to, let's see, right here. Here's a little break. So here's where the last time it found some institutional support. We'll draw the line on my screen out there. And that is at the price point of this little gap up, which took place on the trading session of September 3rd, 2013. Last time down there, the volume on that break was 1.9 million shares. It came back with 2.3 million shares and held. Again, that is at the price level of $60.66. Looks like that is where Harley-Davidson is headed to at a minimum out there. I don't know that really is going to hold it. I need to come back and take a look at the weekly chart for Harley-Davidson out here. So let's put this on the weekly time frame and see what kind of retracement levels we've got out here. So on a weekly chart, this thing is it looks like, I can't tell if it's broken its trend. Let's go see if we can find out if this thing, it has not really broken a trend. Now, the trend here takes us back into 2009 lows, March 2nd. Let me use a little trend tool out here. We'll draw that from its lows back in 2009. Let's see if we can draw a diagonal area. Yeah, so here's a nice, so it gets us right back into that. How about that? If you take a look at the trend line out here, you know what I have to do is let me do this here. First, let me delete both of these. And let me move this back just a bit further. What we're going to see is this trend line runs into this $60.66 area. So that makes that a very important level for it to hold price-wise, because you could break a previous level, I'd have to say right about there. And it's right in that range of about $60.66 out here. But here's the trend. So the uptrend on a weekly chart going back to 2009, it'll take quite a move in order to go ahead and break through that. But if it does break through that, that's not a very good thing for Harley-Davidson. HOG is the ticker symbol out here. Right now, the Dow is up 28. S&P is up 7. It's trading at 1980. The ES Mini trade at 1975. You know, my suspicion here for the market making a little pop and a drop and continuing its consolidation move is really what the message behind that Euro-Japanese yen chart is. What we really need to focus on to get an idea, in my opinion, as to whether the market is going to break or not is going to be the Russell 2000. If we take a look at the Russell 2000, I'm going to look at several different charts out here since I utilize multiple trading systems. So here's the Russell 2000. I guess I could put all this on one chart, but why do that when I've got the work done like this? Here's the Russell 2000, 120-minute September contract. You can see the descending price channel. We talked about this yesterday here. We talked about how on Friday, price broke above that. That was coming into the 3:30 time frame. Price closed above that. When you break above that, you're sending the message that you want to change your trend out here. We did see take place since that time frame was a move sideways to lower. Price yesterday continued to test that descending price channel, but price wasn't allowed to get back in there. No longer did the descending price channel want it as part of its club out there, and it continued to move just slightly higher. Now, the real key here, which it has not done, is this swing point. The swing point here is going to be the 1:30 p.m. high from July 18th. That's at 1149.60 out there. You're trading 1149.50. You get above that, or if it gets above that, if it closes above that, does it with any kind of conviction, that sets up an A to B equals C to the upside. You may say, well, where would that take price to? And I will tell you. That'll take price up into the 1160.70, maybe 1167.80 area. I'd have to say 1167.80 more likely would be its target out there. If it fails here and it's not able to get up, well, it'll probably go down and try to get back inside its trend. Tell everybody that it paid its dues and wants to get back in the trend to the downside. But if it cannot do that, the only thing that's really stopping it, in my opinion, from trying to break upside right now is the euro Japanese yen. That's where any pressure is coming from. But take a look at the VIX. No liquidity pressure here. VIX index trade at 1196. That's below its 50-day exponential moving average, which is at $12.08 out here. So that's in bullish mode. Anytime you trade close below the 50-day exponential moving average, that will give you a nice bit of liquidity in the market, as if this market needs more liquidity. Well, it does, folks, because when you trade above that 50-day, tells you that the sphincter muscle of the bulls is getting a little bit tight out there. Now, if we take a look at the 200-day 200 period, I should say, exponential moving average inside of the Russell 2000. I brought another chart back up on my screen out here. Let's go take a look. Let me draw the A to B equals CD pattern on that. We'll use that hammered low, by the way, at that price relative strength divergent pattern. That's your A point. Again, your B point was at 1149.60 area, and your C point down here. And so your 1-to-1 takes you right up into that 200 period exponential moving average. That's that little red dotted line on my screen, priced out at about the 1159 area. So that's another way to take a look at the Russell 2000. At this stage here, the 120-minute time frame is in bullish mode, but boy, the S&P does not want to bust through that 1974 level out here. Now, not to get bearish on this, we'll see. I would say, and I'm looking off screen here because I've got another, my trading screens out here. So I would be, I'd be taking a look at 1971.50. You close below 1971.50. We'll call it on a 10-minute bar out there, and that would say that we're going to see another day of rejection of that 1974 level inside of the ES mini. But we'll take things one. If it gets down to 1971.50 and that holds as support, then. And the euro Japanese yen continues to not go any further lower out there, then you've got the fuel necessary for the markets, in essence, to move higher. Let's take a look at gold and silver. So that's kind of the trading setup as I see it at the moment here. I'd say you're not at a stage to necessarily go short, and you haven't really gotten a breakout to go long either out there. A lot of great intraday trading, no question about it. Not so good if you are a little bit longer-term trader out there. Of course, if we take a look at the longer term, speaking of longer term, I'll eventually get to where it is I'm going. If we take a look at the longer-term charts out here, we'll take a look at the daily chart here. Of course, this is the 30-year Treasury. 30-year Treasury is in full bullish mode out here. Take a look at that nice little rising. I don't have the price channel in here, but take a look at all of these nice little. Here's a kind of a traditional type of market. You'll see these little red signals on here. That tells you nothing but buying pressure. You finally get the normal sine wave move in the market where it pulls you back. Let me get my crosshair out here into the trading session of February 12th out there. You get a close above that high. The very next trading session puts you right back into buy mode inside of the 30-year Treasury. This is the September contract that we're looking at. A nice little gap up here on May the 30th. You gave you another potential, just a normal retracement. This is back on July 3rd, and then a move higher out here. Nothing but these are mostly red signals telling you lots of buying pressure inside of the market out there. Let's take a look at the so as I say, on an intraday basis, a lot of pretty decent trading range to trade. On a daily basis, just nothing but a lot of noise out there. If we put up the NASDAQ Composite here, NASDAQ Composite, we can see it made a nice high with huge relative strength. This is back on the trading session of July the 3rd. Moved lower, has not been able to get up to those highs here as of yet. today, gapping up just slightly, but no great shakes out here. Did have a nice little bull sash candle that took place on July 18th. Actually, the most important candle that was formed yesterday, and it's one that would suggest, okay, maybe the S&P does want to break out here. I'll believe it when I see it. When I see it, I'll know what we're looking at here. I'll go ahead and pull this back. Let's take a look at the S&P 500 and take a look at yesterday's candle. Little hammer candle out there. Is that important? Yeah, it's actually very important out here. That says yesterday's low is going to be an important level for us to be paying attention to in the S&P 500. It says you ought to find really good support down at 1965.77 out there. Is it formed a hammer? However, the S&P needs to close above the July 3rd high on the cash index. That's priced out at 1985.59. That's up another 5 points from where it is trading right now. But, nothing really bearish about this. In fact, nothing bearish at all other than just a sideways upper-level consolidation pattern out here. That's what's going on inside the S&P 500. I think that is probably the most key candle that had formed yesterday, certainly as we take a look at the index. If we take a look at the semiconductor index out here, the SOX, it is gapped up just slightly here this morning. Again, nothing really bearish about this other than some two price relative strength divergent patterns here that both have confirmed and then both have given it back up. So it just tells you the underlying strength inside of the SOX index out here. Right now, we've got the Dow up 39 points. The S&P is up 7, and Chipotle up $70. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. It is always better when we're together. And at TFNN, you and I, we can be together even longer. As we kicked off yesterday morning, we've added an additional hour. Now TFNN, you can check into the Hotel California now at 8 a.m. out there. So our man John Logan kicks things off. He did a great show today. So, we may not be on a radio station near you, but you can always tune in by going to tfnn.mobi. That way you'll be able to get the show on your mobile device out there. Of course, your mobile device will pick up the live stream of the show. You'll be able to pick up John's charts just as you can mine by going to the homepage at tfnn.com. Upper right-hand side, you'll see a button. 3 smartphones on that. Click on that. The show will stream live. Of course, you can join our Tiger's Den. You can do that for 30 days out there. So there's a nice free trial there. You'll meet all kinds of wonderful individuals with trading ideas as well. Active trading ideas based on what's going on inside of the market. So do yourself a favor to do that. You've got the charts in HD. Welcome to all our eSignal friends out here who have upgraded to version 12 and are using that little media button tool so that you can watch TigerTV live. Don't forget, you can always give us a call at 877-927-6648. As of 9:55 a.m. here on July 22nd, if you're short, do me a favor. Please, number one, I will tell you you're trying to pick a high. Nothing wrong with that. The only thing wrong with that is if you're short and you are not using a stop out there, make sure you use stops. Make sure you use stops. Make sure you use a bracketed order on everything it is that you trade out there. This is nothing more than a math game. It's a math exercise, and the most important aspect of math is make sure that you've got a stop. If you're wrong on the trade, just go ahead. Don't lose more than 1% on any one trade. Learn about position sizing. In fact, if you would like to learn that, I've got a 90-minute workshop. I'd like you to learn about it. It's available. It's included with my newsletter service, Mastering Probability, so you can test drive that. Click on, again, my name on the homepage at tfnn.com, then click on Mastering Probability, 30-day risk-free trial there. Look, if the Dow gets above its, I'll put this chart up on my screen here right now, the market's going to break out. It'll break out in a big way, and you'll see the Dow get above the high from last Thursday, July 17th. That high is 17 to 151.56. Nothing more bullish than one of your most bearish reversal patterns that fails. That's a 3 drive to a top pattern that had formed back on July 17th. Gave us everything. Good old key reversal session, bearish engulfing. However, that bearish engulfing candle really got kind of obliterated on Friday's move. I don't care what the volume was on Friday, candlestick-wise, and I don't really care that I don't personally care. When it comes to stock charts, when it comes to looking at a stock chart, I really don't care what the news was. You see, I can't go back to any real day for the most part and tell you what the news was when I take a look at a candlestick. What I can tell you is what the candlestick represented for us. And when you don't have follow-through on a move, either a break-up or a breakdown out here, in this case it was a breakdown, we didn't have it, it's got to make you say, something to think about. You may be asking, hey, what's that little blue squiggly line on the chart out there? That is the Bradley index out here, and the Bradley model, I should say. That shows that the market ought to start turning down out here. But the Bradley model has been somewhat suspect here as of late. Let's just trade the patterns and not the Bradley model out there. So at this stage, if you're short, okay, no problem. Make sure you've got some stops in trade, and watch that Dow. Watch that Dow like a hawk. A close above 17,150, 156. And I don't mean 17,152. I mean a real close above it. I would say close out any short trades that you've got, folks. Well, it is a terrific Tuesday. Thanks so much for joining us. Stay tuned. The Money Master Show is up next. If you're off to start your day, have a terrific day. I look forward to seeing you soon.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.